if it's on the market, it's tough to get a good deal because the stuff that is on the market has already been, sent out to potential investors.
Yeah.
And if they've turned it down, you got to ask yourself why.
Welcome back to the Cash Flow Podcast, the podcast where we talk about turning real estate into profits. I'm your host, Jason Yoss. And before we get to my special guest today, Daniel Pfefferman, I want to take a couple minutes to thank our sponsors. First and foremost, Daniel's Plumbing, serving all of Orange County, San Diego County, and then Inland Empire. And as well as Rainforest Plumbing, Heating, and Air, servicing all of Maricopa County, Phoenix, Scottsdale, and beyond. Without your support, we couldn't be here with you. Thank you, guys. And now, Daniel, great to see you, brother.
Great to see you. Thanks for having me.
I'm super excited to have you back. Our 2-year anniversary, episode 1, was with you.
That's crazy. I was having flashbacks when I walked in this morning.
Oh, man. We've been so blessed to have a lot of special guests on, but it started with you saying like, I'll come in. I'll come in. And
Let's try it.
Let's try it out.
Yeah.
Exactly. So thank you. Thanks for coming back.
Of course. Thanks for having me. This is great.
We're gonna have a little reunion episode. So again, Daniel Pfefferman, broker, associate, and founder of Define Real Estate San Diego.
That's it.
Also the host of the Define Real Estate podcast. Everybody's got to tune into that podcast. It's great.
Check it out. It's an interesting one.
I've been on. I love it. And I always love the story. You've been licensed for over 10 years, but you were a corporate pilot beforehand.
That's right.
Is that how it all started? Like, how did it go from corporate pilot again to real estate agent and now multifamily investor?
Yeah. So, it started now. I just turned 41 not too long ago. And so it kind of, thank you. And I was kind of reflecting, especially before coming in. It all started back when I was in college. I was studying real estate finance. I had these aspirations of going into commercial real estate. I had an uncle that was a big apartment complex or property manager and just had these big plans. And so I had started investing in real estate at a fairly young age when I was in college. And then life took a left turn and I became a corporate pilot, kind of, I don't want to say stumbled into it, but it was unexpected and it was an amazing 10 years of life. Right. But I wanted to settle things down and stay home, not live out of a suitcase, right. Especially wife and kids, just be more present. And so, 2017, focused on real estate full time. And it's kind of just evolved from there. And when thinking about the future, I've started wanting to buy real estate. And so that's kind of for investment standpoint.
It makes sense, although corporate pilot does sound like an amazing job, career.
It was fun. It was fun at the time. Settling
down, also real estate, it fits that mold. Now, your current focus now has really shifted to both resale and that commercial product. Talk to me about how over the last 2 years, because the market has changed, how has your philosophy changed in real estate now? It's not 2021 anymore.
Yeah, exactly right. So I think there's kind of two different lenses that I look through when it comes to how I focus on real estate. One is from an investment standpoint. Right. The other is for an end user standpoint. So in my brokerage and in my business, when working with clients, it's what's your goal? Are you buying a house to live in and has the potential to be a good investment, or are you buying it as an investment? And so I think the biggest shift, and then there's, for me, investing in properties also.
Yep.
So, it's funny. I watched the video from the first time I came on because I was like, I'm curious. What
was I saying 2 years ago?
Yeah, what was that like 2 years ago? And it was interesting to reflect on that and what the change has actually been. And, I think there's been a lot of people that have made the shift maybe from residential to more industrial type investing, maybe retail, things like that. We're still in that residential side, still acquiring, multifamily properties and focusing on value add potential. But I think just in the last 2 years, interest rates have had a big impact on this multifamily market, and it did take a hit. But I think it's starting to come back.
Is it tough to get a good deal?
If it's on the market, it's tough to get a good deal because the stuff that is on the market has already been, sent out to potential investors.
Yeah.
And if they've turned it down, you got to ask yourself why.
Also, just reflecting from the property management side of the world, there's been a lot of laws that have changed in the last couple of years that has made investing, especially on the residential side and apartment side, difficult.
Yeah.
I mean, how do you look at it from an investor standpoint? It is what it is. We're just going to navigate around that, or how do you take that into account when you're looking at your next investment purchase?
It has me considering diversifying into non-residential.
Sure.
I would be lying if I said it didn't.
Sure.
California is not easy. There's a lot of tenant protections that are in place that are good, but then there's also a lot that have a negative impact on landlords.
Yeah.
And, they say, oh, corporations, well, I have an entity that owns my real estate. So
I have an LLC. I'm a corporation.
That's exactly right. And so I think that there's a lot of nuance that gets lost when they're creating these laws, and how, when things go to vote, how they're communicating what they actually are. And I think that there's a lot that's missing there.
I agree. The way the laws or the changes are communicated to the public, and then the way they're actually adjudicated downtown, especially here in San Diego, it's unfortunate.
Yeah.
Because it's not really this. I think we've lost a lot of the fairness, and then an impacted court makes it like, oh, well, it's going to take forever to even get a court date, or the way the process works, you can have a big runaround before you get an actual adjudication. So,
which can be really hard if one of the properties only has 2 tenants, because there's potentially 50% of your income that's gone. And or if it's a single family home, it can be difficult.
On the brokerage side, have you added more? What's your focus now when you're talking about, you said figuring out what their goals are. Are you adding more? Are there more bells and whistles to define real estate, or what is it that, you feel like you brought to the table over those last 2 years?
I think the biggest shift is communicating what we do, and how we do it, and the service that's provided. I know everyone says, oh, we offer white glove service.
Right.
But what exactly is that? And for us, I think especially the last year was highlighting that it's not just a bunch of smoke and mirrors, that this is what you actually get. And here's why. I think identifying why we're doing what we're doing, just in general, as a broker in this industry, with my, the other agents in my office, with my director of operations, our photographer, like in general, here's why we're doing what we're doing. Yep. And I think that that's the biggest reason why my business has had the bounce back, because 2023 was slow, 2024 was slow, 2025 I was back to where my business was in 2022. So like we're getting back to it, but it's through communication and here's why you should care.
I love that. And especially for, a real estate veteran like yourself to be able to say, look, there was some slowdown after the 2020, 2021 time period, but now we're back to being successful by leaning into the strategy. That's good to hear. I want to focus then on some case studies. Talk to me about maybe one of your current investments or personal investments that's worked well, or as well as maybe a brokerage case study that's worked well.
So from an investment standpoint,
sure.
We had just recently purchased a property. I think before the last time I was on.
You're right.
And like it was an eight family apartment complex. I had a tenant that was master leasing it. Started at the time. They're still in there. It's been positive. Wow. Everything's been good. It's had its ups and downs and, little things that we're working through. But I think the biggest thing for that was for me to identify, here's the potential issues that may arise.
Right.
And here's how we're going to work through those problems. And then being a little more laid back and less stressed when things don't go according to plan. Because as a pilot, I am very focused on details.
Right.
And then having kids, I think, helped with this. But like, I need to take a second, take a step back and realize that not everything's going to go exactly how it should.
True.
And if there's a problem, here's how we're going to work through it.
Explain for the audience as well, what is a master tenant and, how does that benefit you, especially as a multifamily owner?
So for this property specifically, a master tenant is someone who is leasing the entire building. So I don't have 8 individual tenants. Okay. I have one tenant that's leasing the entire building. So it can be great if they're paying their rent on time. It can be great that I'm only communicating with one person. It can be not so great if they don't pay their rent. Not that they did, but but just in general.
Sure.
It almost takes it to where I'm renting a single family home to one family and there's no hedging your bets on anything.
Right. Yeah. There's definitely some risk there. Did this just come to you? Did you pursue that type of a master tenant? And in hindsight, is that something that you would continue to pursue on other real estate investments, or it just happened to work specifically for here and we're happy to have them?
Yeah, so this group had been looking for real estate. We'd been looking for property for them for a while. We're looking to acquire more property for them. Wonderful. So I guess that kind of answers your question. But we had been looking specifically for them. So we knew the type of property that we were looking for. Right. We knew the neighborhoods that we were looking to be in. And then this property came along and it was the ideal scenario. Mm-hmm. I don't know that I would particularly try and find a property to hope that I can put a master tenant in there. But the relationship that we have is just, it works for everyone. And you have to have a level of trust. It's because all our eggs are in that basket. And that's it's not a small property. And so if something were to happen, we're going to be scrambling a little bit. So yeah,
it makes sense.
It's good. It's a good fit for them. I don't know if it is the right fit for everyone.
Perfect. Let's switch over. Talk to me a little bit about some case study for your brokerage and how your brokerage has been successful. I mean, specifically San Diego centric. I mean, this isn't nationwide we're talking about. So what have we seen that's worked well?
So are you saying specifically for how I've worked with clients or for investment properties for them, or
just in general for your clients here in San Diego?
So what I think has been really good for them is understanding and working through what they qualify for in the very first place.
Yep.
Understanding exactly what they want. When I first started, I would throw spaghetti on the wall and say, okay, great. Let's just look everywhere. Let's not really set a budget, because I was nervous about saying, hey, you guys need to talk to a lender first. I didn't want to do that. I wanted to have that relationship and then work through it. But then it led to heartache. Yeah. And sorry, you don't qualify for a house that's $2 million. You qualify for a house that's $1 million.
Or your expectations are unrealistic.
Exactly right. You've got champagne taste on a beer budget, where unfortunately in San Diego, that's not easy. So I think what has worked is setting expectations from the beginning, not being shy or nervous or apprehensive to be honest with clients. And it's talked me out of a job before, but it saves everyone. Like, there's only a finite amount of time in the day. And if I'm not at work, I'm at home with my kids. And I don't want to be taking away from time at home with my kids, showing clients properties that they can't afford or that aren't the right fit.
If you have a scenario where you have clients who are not meeting the appropriate expectations or the professionalism on how you want to go about handling your business, how do you approach that?
So I've had to have those conversations.
Okay.
And
give me an example, like when you're like, hey, that's not the way we at Divine Real Estate approach this.
Yeah. So once upon a time, you could write an offer on a house that was wildly underpriced.
Yeah, you could lowball it.
You could lowball an offer. Yes, exactly right. We are not in that market in San Diego. And, nationwide, San Diego is its very own micro market. Yeah. So you can't look at what nationwide numbers are or anything like that. So we've had clients that have said, hey, we want to write an offer $300,000 under list price on a $2 million home. Okay. Or we want to write an offer that's $150,000 under list price on a sub $1 million home.
Wow.
And we've had to say, look, here's what the comps support. We want you to get the best deal. Yeah. There is no question we are representing you as a buyer, but we also don't want to be disrespectful. And we also don't want to waste everybody's time in writing offers that will not get accepted or even considered, because an offer that's flat out rejected does nobody any good.
Negotiating against yourself,
100%.
Crawling back.
Yeah, it doesn't show that you're a real buyer. Yeah. And so we've had clients that have said, well, we'll find another agent that will do that. Okay, that's fine. We're not the cheapest in town, but also we are very proud of what we do and confident in our abilities, and you get what you pay for.
And that's how do you best communicate that to a client that hey, look, we're your partner, but this is the way it's got to be done.
I mean, I think just how I just said it. Like I'm not very good at sugarcoating it. And
direct.
Yeah.
Here you go.
It's like, my wife tells me enough that I lack a little bit of the sensitivity and softness. But I want to make sure that I get my point across because we will do the best thing for you. I'm not a desperate agent. I don't need to get that sale so I can pay my bills and so I can eat dinner that night. Like, I'll be fine. I truly want the best for my clients. And I think when they understand that, I can be honest with them, and they may not like it, but they can understand where I'm coming from.
I agree 100%. The fact that we're not an Italian restaurant, or if you want a Chinese, there's another one down the way. You know what I mean? There's the level of professionalism that we want to portray and have with our clients is very important, and sometimes that means saying no, we're not going to do things that way. So,
and I want them to be just as honest with me.
Sure.
I ask every client during the transaction, after the transaction, what can I do better?
Yeah.
What are you happy about? What are you not happy about? How can I improve? Because at the end of the day, it's a service industry.
It is.
And I want every client to be ecstatic at the end.
Right.
Because my whole business is referral based.
And without constructive criticism and feedback,
how
we're not going to get better.
Yeah, exactly right.
100%. Let's talk about some goals. What are we looking at for your business for Define Real Estate, and maybe as well personally, for 2026, but also if we kind of peaked out at 2030.
Yeah.
How do you envision Define Real Estate San Diego shaping out, and also your real estate portfolio?
So, I think for me, the biggest thing is, how can I continue to work doing what I love?
Right.
Because I love what I do, while at the same time making more time to spend with my family. And so I think for me, last year was a very much of a foundation setting, standard operating procedures. I love my checklist.
Yep.
And getting all of that foundational work in place so we can continue to scale with additional agents. I have my business partner, Jessica Speciali, who has taken on more responsibility on my transactions, and it allows me to go to Montana for a month and not have to worry what's going on. I have, our director of operations, Emily, who is in the office day in and day out, and she's working on the details. So I think my goal for 2026 is bringing on another agent or two, someone who can handle, open houses, do all of those types of things, because we do work with buyers and sellers, but my focus is really listings.
Got it.
Buyers come from that, inevitably. And so, but working on a second agent who can handle our open houses, who can work with buyers, who can do that kind of stuff. I think long term, setting up these SOPs, I guess, is a good way to put it.
Absolutely.
Just these standards and checklists and ways of doing things. So I can go camping with my family.
Sure.
I can be off the grid. I don't want to always, just because I have a Starlink doesn't mean I always want it on, and be able to go do that and generate the business and meet with clients. And there's a few key details that I really like about the industry that I want to continue to do forever. And I think that's my retirement plan, is still doing those things while being able to have a team that supports the other items in my business.
With that same SOP mindset, when you continue building your real estate portfolio, is there something specific you're looking at to grow your passive income portfolio?
Yeah, I mean, our focus has always been cash on cash return.
Got it.
I don't underwrite properties as, what's the cap rate?
Yeah.
Because that only really matters if you're going to sell it.
Yeah.
And so part of the business is, having that passive income. So, the way I look at my income is the real estate, the brokerage, and our business, and then the passive income as well. And it's not totally passive.
I was going to say, it's not really passive, but yes, that's the right way to describe it.
Yeah, separate form of income. Now, we've talked about this, from the property management side. I'm still managing our stuff.
Right.
I think I'm probably capped.
Which is a job in and of itself.
It is 100%. I'm dealing with a gas line issue that I was on the phone with on my way here.
Yeah.
For a property, and it's inevitably going to happen. But I think my goal for that is how we're valuing properties from a return standpoint. Because if the money's there, then it can't be somewhere else. And so what is our return? And then how do I make that part easier also? Because again, if I'm in the woods in Montana, it's not going to be very easy for me to get on the phone with a plumber or a handyman or something when things go awry.
Don't want to turn on Starlink just because you have it.
That's exactly right. That's exactly right. And that's where I lean on, you guys. And that's how we met, because you were managing a property that I acquired.
Which is one of my favorite acquisitions, by the way. And we told that story before, but I love it. Still one of my favorites. Wrapping up, getting your crystal ball out, your magic 8-ball, overall direction for the San Diego investment market. Where are we going?
So, real quick side note. You said magic 8-ball, and it just triggered this.
Yeah,
so
shake it.
Yeah, so I was dropping my kids off at school. I like to do drop-off every morning.
Love that.
And a kid comes running up with a magic 8-ball.
Yes.
And these kids were losing their minds, asking it questions, doing all the stuff, and I just glance over at the parents, and we're just like,
yes.
Do we tell them that it's gonna say the same 6 responses, or
is it 6 or is it 8 now?
I don't even know.
But I love that.
Yeah,
here it is.
It was hilarious. So I'm sorry to interrupt you.
No, so we do have that for real estate. It's on sale, $9.99.
Yeah, exactly right. But I think the real estate market continues to appreciate. Yeah. I think it continues to see growth, and I'm speaking specifically for San Diego,
right?
San Diego County, because again, we are such a micro market. But we'll see if we get this, new Fed chair and what that does to interest rates. Which I think if that happens in May, June is going to see a lot of change. I tell clients 3 things. You're either going to buy a house at your current interest rate and prices are going to go up and interest rates stay the same. You're going to buy the house at the current interest rate, rates are going to go down, you refinance, and your house is going to go up.
Yeah.
You buy a house at the current interest rate, rates go up, you're great, and prices are going to still go up.
Yeah.
In all 3 of those, prices go up. So if you're thinking about buying, whether it's an investment property or a primary residence or even a second home, in San Diego, prices will continue to go up in the long term.
And there's pretty good historic data to back that up. Overall.
100%. Yeah, it may ebb and flow, but even after 2008 and 9, prices came down not nearly as much as the rest of the country.
Correct.
And look where we are now.
Yeah. By 2016, I think we were right on board. And by 2019, your house was worth 300% more than you paid for.
Yeah, exactly right. And I think COVID saw 5 to 7 years of appreciation crammed into 18 months.
Yep.
But we're getting back on track with where the appreciation is and inflation and everything else.
Last question as we wrap up. You're so intentional with everything you do, and I do attribute that not just to how awesome you are, but your corporate pilot mindset.
Yeah.
Let's talk about how we're giving back to the young real estate investor in your sphere. What are you doing, saying, giving to help them, achieve the level where you're at now?
So I believe that it's important to learn from other people's mistakes.
Yeah.
I think that anything you can learn from someone who's been in the business, regardless of what the business is, you should take that to heart, and you should really digest it and consider it. So, I like the education component. That's a big part of our business for Define Real Estate, is educating clients. And so I'm on a leadership committee where, agents have access to me. I'm happy to tell you my playbook of how I do what I do. I don't mind doing it because a lot of it's based on my personality and it works for me.
Right.
and it doesn't work for everyone, but I think just being a resource for people is huge, and I like that. You know, there's 40,000 agents, licensed agents in San Diego. I mean, we need, or I don't know if San Diego or California, I think it's San Diego, but either way, we need to be better.
Yeah.
And the biggest way to be better is through education and through learning from what other agents are actually doing, not just what a book says.
The point that you made about learning from other people's mistakes instead of having the need or the requirement to make them yourself, it's a big deal.
Yeah.
A lot of people would love to not have to step on their own crank. Instead, just, this is what my mentor showed me how to do, how to avoid it, and then I do that.
Yeah,
and
exactly
I
right.
Save a bunch of time and heartache.
And having someone tell you, here's why you don't do that.
Yeah.
Because I've been through it, and here's what happened. So, you know, if you want to do that, by all means, but here's what you can expect. And I would imagine, you know, most people don't want to make those mistakes, have egg on their face, and regret it.
I love it.
Yeah.
Great feedback. Daniel Pfefferman, everybody. Thanks so much for being here.
Thanks a lot.
Great to have you. For everybody else, thank you for tuning in to Cash Flow, the podcast where we talk about turning properties into profits. We'll see you next week.